Hey, welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, the first day of November, 2024. And joining me, as always, my friend and partner on Everyday Economics, Dr. Orphe Divounguy, PhD economist. Dr. O, this is our week ahead episode for the week of, I guess it would be for the week of November 4th or 3rd, depending on if you choose to start your week on a Sunday. Lots of stuff going on this week. I'm very eager to read your column in the Center Square this coming week to get an idea of what's going on. But let's you and I talk about what's on your mind as you head into that process to write your column. We have an election on Tuesday. We got a jobs report this morning. The jobs report, and I know you're about to explain it away, but the jobs report, not too hot. 12,000 new jobs added. Of course, you said that this was coming. I don't know that you thought it would be this bad, though.
Yeah, no. I mean, yeah, I don't think I thought it was going to be flat. I just thought it's going to be murky. It's going to be nasty. We're not going to be able to make a lot of sense out of it. Because
let me let you get into the details of it. There are some factors here, right? I mean, we had bad storms in the month measured period.
Yeah.
You've got a Boeing, which is on strike. It's a lot of people that are not working. You have a bunch of other labor issues around the country where people are not working. But make sense of it for us.
Yeah, exactly. I mean, it affected the storms in particular, the hurricanes. Basically affected the fell during the reference periods of the survey, of course, in October, and it affected the collection rate of. Remember, this is a survey; these are two surveys, right? So the establishment survey was clearly affected by the storms, and so you take that plus the strikes, and then you think, okay, well, how many jobs did we actually really create in October? And so that's why I don't take that the headline number very seriously. I look at the survey that was not affected by the storms, and that survey is the household survey, and the household survey says basically unemployment rate is unchanged from a month ago. Wage growth remains high. Average hourly earnings actually increased 0.4% in October, up from 0.3% in September. And on a year-over-year basis, wages are 4% higher than they were last year, unchanged from a month ago. So, take it for what it is. It seems to me like the establishment survey, which was affected in terms of collection rates, probably doesn't say much. And that it's likely that employment growth is not very far from what we saw in September. It's probably a little bit lower because September was pretty high. It's 223,000.
Mm-hmm.
So it's probably lower, but it's pretty. In U.S., layoffs remain low. People with jobs have jobs, and they're staying in the jobs. So things are not deteriorating as much as the headline numbers suggest. I want to say though that there were negative revisions to the August and September numbers, right? And that the August and September numbers combined for 112,000 fewer jobs than previously reported. So there was softness, especially in August. But despite the revisions, the September number was still a solid 223,000 job gain, net gain. And so you had softness, and then you had a jumbo rate cut by the Fed, and then you had a strong September report, a rebound essentially, and so that hasn't changed from what we knew before we woke up this morning.
The implications, for the election day, and I don't want to pull you into necessarily a political discussion, but certainly the optics don't bode well for the current administration, to which Kamala Harris would be tied. And from a sentiment standpoint, in the country, I mean, they're the big issues that are on voters' minds, right now would be, the economy, immigration, and I think that crime it would be in the top three: public safety and crime. This doesn't fall at a particularly good time for the Harris Walz side. I don't want to push past that necessarily, but like I said, I don't want to drag you into a political
Well, I mean, look,
discussion.
the reality, look, here's the reality on the crime story. I mean, the reality is that crime rates are actually lower than they were a year ago. They're lower than they were when President Trump left office. And so, I mean, I don't subscribe to the rhetoric of either candidates, whether it's the crime rhetoric from President Trump or the economy is gangbusters from Biden-Harris camp. I would caution to our listeners to stay away from the noise and to stick to the data. And the data shows that basically on the economy side, we had an inflation surge, the highest in more than 40 years, that basically pinched households, eroded our savings pile, and basically, put us in a situation where the Fed had to intervene in a record by basically raising the Fed funds rate by 5 percentage points, a little bit more, in the shortest period of time ever, risking sending the U.S. economy into a recession.
Mm-hmm.
Everyone thought we were heading into a recession because of how sudden and abrupt changes in Fed policy were, and how tight monetary policy, or at least probably wasn't as tight in retrospect, but how fast the changes took place. It just turned out that the U.S. economy was actually stronger than anybody thought. It turned out that the consumer had enough firepower, but to keep going. But I think it's important to note that there was a massive gap between 2/3 of the population, right? The top 2/3 and the bottom 1/3. And the bottom
Mm-hmm.
1/3 are suffering the consequences of the past few years. I think that's fair to say. Inflation really hurt those at the bottom of the income distribution, and now the labor market, still strong. But if you don't have a job, you're not very happy because our hiring rates are very low. They're now lower than they were before the pandemic. And so the labor market has cooled tremendously, as a result of kind of the combination of COVID, but the policies that followed. So anyway, you're not going to hear that from the incumbents. And then and of course the newcomer or old comer, whatever you want to call them, the return candidate is going to lean on a story that is, somewhat far-fetched. The crime rate is lower than it was.
Yeah, but I let you skate on that when you mentioned that earlier. There were changes in reporting requirements, and so I think that I would just recommend that people who are in local markets use their eyes and ears on that.
Yeah, I mean, look, if you live in a major city, the truth is, yes, you might be concerned about crime rates. Yes. I don't think we should dismiss that, but I just want to make sure that we, we pause on when it comes to just kind of like repeating the rhetoric that's out there, right?
I think that's fair. I think that's fair. I think that's fair. I think that's fair enough. But I don't trust the data. Let me ask you this, and simply because of the changes that have been made there.
Totally.
So we are going to get a Fed decision this week.
Yes.
And I think that's probably, it's not as if we buried the lead, but we have a lot to chew on here. What do you think Jerome Powell's going to do? I mean, with the numbers that came in on the jobs report, with inflation kind of, I don't know, it's just sort of like hanging around, right? So what do you think is going to happen this week?
Totally. And I think part of the problem is fiscal policy, right? We know that deficits are crazy high and continue to increase. And that's stimulative. That essentially, that's just going to put, that's kind of preventing partly part of the big problem, preventing further disinflation. We had a big increase in productivity growth, right? That productivity boom is essentially working to bring down inflation, but the pressure on the demand side, coming in part from the government spending, is keeping inflation somewhat elevated. Headline inflation fell, but headline inflation fell because energy prices fell. Core inflation remains pretty stubborn at 2.7% year over year. It's been flat, and I'm talking about the PCE, the inflation estimate that actually really matters, and that's been pretty flat for the last few months. And so, but essentially, look, the fact that there was negative revisions to the jobs report from the previous month. I mentioned the current jobs report doesn't mean much, but revisions to the previous months are, to me, an indication that the Fed will probably just stick to the plan. And sticking to the plan is another 25 basis point rate cut next week, right? I said the situation hasn't really changed all that much, right? We had 1 month, a September month that was it was higher than that showed basically a small rebound in employment. We don't have the type of wage growth that is fueling price growth, and so the Fed is probably going to continue to normalize policy, and they'll do that with a 25 basis point rate cut. Also, they don't want to upset the market. The market's really priced in 25 basis points, and so trying to go against that and upset the market would push yields higher and really kind of put the screw on tight on business, on borrowing, on businesses, on consumers. They don't want to do that. I think they want to glide slowly onto the runway. And the way to do that is to lower the Fed funds rate by 25 basis points and then wait and see.
All right.
We're gonna get another jobs report next month. We're gonna get some we're gonna get another inflation report. They'll wait and see what happens in November before pulling the trigger again, probably.
All right. Well, let's put a pin in it there. Plenty more to talk about on Everyday Economics. Don't forget to take a look at Orphe Divounguy's column every week at thecentersquare.com. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high-quality podcasts at americastalking.com.